Okay, so we have a commonly asked question, which is, can I transfer money from a 401k or a qualified plan into a life insurance policy and bypass the tax? Can I roll it over while doing it and then use the money in the life insurance policy tax-free? The answer is no, unfortunately. So whenever we want to pull money from any type of qualified plan, a 401k, an IRA, that distribution is taxable. So in order to actually get the funds into a life insurance policy, a couple options here. One, I can manually pull out the funds. And what that means is if I have $100,000 in an IRA, in a 401k, if I pull out $25,000, that's going to be taxed as ordinary income. So, example, let's say my income is $100,000. I have a 401k. I'm going to distribute $25K per year. Well, what will happen in this case is if my annual income is $100K, I take a distribution of $25,000. That 401k, no taxes have been paid, so my income that year is now $125,000. So when I manually take distributions, what I want to look at, you always want to consult with your CPA, tax attorney, whoever you use as a specialist for this, unless you do it on your own, is how much income tax will be due, how much financial pain is going to be inflicted when I make that distribution. This way I don't pull the money out and then find out after the fact, hey, I've got to deal with this huge tax bill now. If we want a hands-off approach, we can use an annuity. A SPIA stands for Single Premium Immediate Annuity. So in a similar situation, if I have $100,000 in a 401k, I can take that 100K and I can roll it over or transfer it to an annuity. Now, the annuity, pardon my poor handwriting, as it is transferred to the annuity, that's a tax-free transfer or rollover. What is not tax-free is then the annuity can then disperse money into the cash value life insurance policy. As it does that, if it's going to disperse, let's say it's going to earn some interest, call it a total of $10,500 per year for a total of 10 years, each distribution, 10.5, I will have to pay ordinary income tax on because the money came from that 401k. So that's where the taxation is going to occur. And then the last option, leave it in the 401k. If we look at it and we simply say, hey, with my situation right now, it does not make sense to use the money in my qualified plans to fund life insurance, to do anything with, because I'm in a higher tax bracket, doesn't make sense to pay the tax right now, we leave it there. And maybe we fund the policy with something else and look at that later. Point being, we want to weigh out all the options, pros and cons, rather than just say, hey, here's a certain strategy, let's force it on you. No, we don't want to do that. See what works, see all the options, and this way we can make an educated decision. Hope this helps. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.